Welcome to this Sphere Day, which is all about Forex money management. What we're going to be looking at today is riding out a period of drawdown and getting back to a new peak in equity. In a period of drawdown, not getting frustrated, not getting angry, staying calm, disciplined and focused. Now, in terms of wise words, you've probably all heard them, okay, which are, cut your losses, run your profits, stick to the plan. That's what you need to do. Well, that is what you need to do. But you need to adopt the right mindset when you're doing that. And the mindset actually has to come from the understanding of your strategy, the understanding of a market movement. It's not just as simple as just saying cut your losses and run your profits, okay? You need to have the right psychology. So what I'm going to do is just go through what I consider to be some tips that will help you get over that period of drawdown, reach that new peak in equity, and stay disciplined. We all know drawdowns are coming, okay? They're a natural part of trading. We have to deal with them. I think these tips might help. So let's just look at them quickly on a storyboard. Right, let's look at some points in relation to drawdown. Basically, overcoming a drawdown, basically staying focused, disciplined, and doing the right things and avoiding getting frustrated and getting angry. Right, now in terms of point number one, drawdowns occur in any strategy, we know that, but what is the typical length from trough to a new peak in equity? A lot of traders who are new to the markets don't actually think this question through. What is a typical length of a drawdown? Well, it's going to vary from trader to trader, depending on the type of strategy that they use. I would say a typical drawdown for me probably be a month to 6 weeks, but can hit longer periods of drawdown. Let's say 3 months. I've had a good few of those. Now, if you look up even the best traders in the world, all of them will have had 3-month drawdowns as well at some point. Okay, so if you're coming in the markets, be prepared for that. A 3-month drawdown. Every trader who trades for a reasonable amount of time is going to hit one. So keep that in mind. That could come at the beginning of your trading career, or it can come later on, but it's going to come. Okay, but I think month, 6 weeks is pretty typical. Get them pretty frequently. You get random distribution of profits and losses in Forex trading. I normally find in a 6-month period, I mean an annual period, most of the money that we make is normally condensed into around 3 to 4 months. The other months are so-so, and there will be drawdown months in there, and you'll normally get at least one bad drawdown each year. That's just from my perspective, okay? But the natural part of trading, drawdowns. But always just be prepared that a drawdown period can last a good period of time. You've got to tough it out, so to speak. Now, you've got to do that, overcoming frustration. A lot of traders even get angry. You've certainly got to avoid that. And obviously remain focused and disciplined. Right. In terms of coping with drawdowns, one of the key points to keep in mind is you need to know your strategy's edge. Why it is going to make money longer term while other traders lose. Now, if you know that, you'll know why it will lose at times too. So you've got to understand the logic of your strategy, have rock solid confidence in it, to stick with it through the period of drawdown and have confidence you're going to come back to profits. Now, let me give an example with my strategy, okay? I like to trade bullish and bearish sentiment extremes, and I generally use the Commitment of Traders report to do this. Now, it can help me get really good risk to reward entries, okay? Because I'm trying to catch the turn, all right? However, on occasions, you will get, bullish or bearish, I'll call them sentiment frenzies, okay? Where the market just carries on, overruns. Then when I'm trying to hit the turns, I'm getting stopped out, I'm getting stopped out, then I'm getting stopped out, okay? Normally, I can get the turn on 2 attempts, maybe on the first attempt. But when you get a sentiment frenzy, and at the moment we've just got bullish sentiment frenzy, yeah, it could be 3 times, maybe more. It doesn't really bother me because I actually know that those sentiment extremes break, and they break big time. So the profits will overcome the losses, okay? Another part of our strategy is trend following and trading tight range breaks. Now, a good thing to do is to have a flexible strategy so you can match it to market conditions. Now, to give you an example, at the start of the year, we were doing some trend following, but the volatility really dropped down. Okay, and low volatility is no good for a trend follower. So we just basically stopped doing it and did a lot more tight range breaks. I breakouts from really tight ranges looking for a high volatility price day. Okay, that worked very well, or worked certainly okay at the start of this year. It hasn't worked so well for us recently, but we've got some good trends. So you've got 3 different ways there that we would trade the markets, and we'd be aware of why each way will win or lose in certain market conditions, if that makes sense. So, yeah, it's just the way it is. Yeah, you will have those periods of draw, just as long as you know why they're occurring, then that's fine, and you've got confidence in the logic of your strategy. You can just continue and wait until the edge kicks in. And like I said, you can also vary your strategy a bit to compensate for market conditions. Right. Overcoming outcome bias, process the outcome, focus on the process. If you've got a strategy with an edge, it's not always going to give you a good outcome, okay? No strategy is always going to give you a good outcome. A lot of beginners, when they come in the markets and they get a few losses, they then start thinking, the process is wrong. And thinking, I should change the process to get a better outcome. Maybe I should tweak what I do a little bit or change strategies. It's a huge mistake, okay? In terms of, if you get a bad outcome, it doesn't matter as long as you did the process correctly. You can keep a trading journal for this if you're new to the markets, but you focus on the process. You're going to get bad outcomes. You haven't done necessarily anything wrong, okay? Now, in terms of next point, the market price is the right price. That's probably one of the stupidest statements in trading, actually. There is no right price, is there? It's a subjective view. Think about it. Market price is always wrong. That's what George Soros says. Yeah, we all share that view, don't we? Of course we do. Because if we thought the market price was the right price, we wouldn't bother to buy a currency or sell it. I think when a lot of beginners hear that saying the market price is the right price, that really reinforces to them that they've done something wrong when the price goes the exact opposite of what they thought it would be. Okay, so at the end of the day, we have to make a subjective view on where prices go. Every trader does, and it doesn't matter where the price goes, okay, as long as you did the right process. And I get a lot of people, for example, I'm sure a lot of other people do on YouTube who do videos. When you do a trade and let's say it goes wrong and then the price goes against you by several hundred pips after you've been stopped out, the guy said, well, you should have bought it. You shouldn't have sold it. Well, it's easy when you don't actually have to do it with an entry, stop and target. I think in terms of, particularly for beginners, analysing the markets is just so much different to actually trading them, getting your entry, stop and target right. Okay, right. Next point, don't try and understand everything and lose your opinion, okay? A lot of traders, when trades go wrong for them, try and make sense of it, okay? Or argue with the price, the price shouldn't be there. They'll want to hold the trade for no logical reason, or come in again, even when the price looks like it's going to either go strongly the upside or strongly to the downside and they want to go the other way. Okay, there's nothing wrong with coming back into a trade you've just lost in. But you've got to have the right logic for doing so. And one saying I always like to keep in mind is, it's from Jim Rogers: markets can stay irrational longer than you can stay solvent. It's very, very true. When prices go against a trader and they start to argue, I won't lose their opinion. It leads to a rapid erosion of account equity and probably a wipeout. Markets just do irrational things. You can't understand every price move in the Forex markets, No one can. Doesn't matter, okay? Now, next point. After big drawdowns come big winning streaks and vice versa. That's said by Curtis Faith in the book The Way of the Turtle. I found that, okay? For a good few months I was having a great winning streak, okay? And then, in the middle of December, I hit my drawdown, okay? And, that does tend to happen to me after winning streaks. And someone said to me once, because I was saying this occurs to me frequently, why don't you see it coming? I've been trying for 30 years. I just can't. I don't know why. I'm sure other traders say maybe just don't know when the drawdown is going to come. Anyway, I digress a bit. But, after you've had a big drawdown, at the moment my drawdowns is kind of normal. But, I found that after big drawdowns, let's say you're going past 6 weeks and you're waiting, it's getting frustrated, things are not going your way, then suddenly everything breaks in your favour, okay? And Faith made this point. The turtles very focused in their periods of drawdown to preserve their equity because they want as much equity left as they could to really maximise the big trends that were coming. So you've got to, obviously, when you're in a drawdown, you don't want to fall too far behind. Okay, you just got to keep the right attitude at all times. And actually, next point is from hedge fund manager Jim Leitner. I read an excellent article on him in the book. I think it's called The House of Money. He's saying that at the end of the day, just playing probability, the probability-based market, you're going to get periods of losses, you get long losing streaks, long winning streaks, doesn't really matter. He goes, just treat that as normal. And he actually said, that his wife could not tell if he'd lost or made millions of dollars a day or when he was trading because he just never really changed his demeanour. He wasn't getting angry or frustrated or anything like that. So just his wife never knew. He said, I think he lost 10 million in a day. His wife had no clue, right? Now, I know a lot of traders over the years, when they get into a period of drawdown, their wife and everyone around them knows that they're in that period of drawdown just simply because of the frustration, anger that they're showing, okay? So try and be like a Jim Leitner. Now, in terms of, obviously, you've got to preserve your equity. And I think in terms of drawdown, I've said this, I'm going to go through it very briefly in this video, but when you're in a period of drawdown, it's like Warren Buffett says, don't dig yourself a bigger hole by trying to get out of the drawdown too quickly, okay? Come off the drawdown by not increasing trade size. A lot of traders, when they get the drawdown, they increase the trade size. That digs them the bigger hole. You cut your trade size, okay? And always keep in mind the Kelly money management formula in terms of the total risk on your account. That's probably going to be my next video. If you don't know what it is, we'll be discussing it. But in terms of our risk, normally it's a maximum 10% of our equity. When we hit a period of drawdown and it starts to get over a month, or the drawdown gives us a fall nearing 20%, then we'll cut our trade size in half, and we'll just be very patient. We'll be very selective in terms of the trades we take, and we might even cut back the number of trades we do. Normally we do 2 to 6, we might just cut that back to a couple just to get off the drawdown, get some winners, get the confidence going. Although, I say, drawdowns, you just got to come through them. Your confidence is affected a little bit. Okay, you've constantly got to stay focused. Vic Spirandio said this in his book Trader Vic. It doesn't matter how experienced you are. When you got a drawdown, there is that little niggle in the back of your head that you're losing it. Okay, your strategy might not be working anymore. All that sort of thing. Spirandio says, obviously you can take a break. I wouldn't take too long a break from trading. If you hit a period of drawdown, I'd sometimes take a week off. I wouldn't take any longer than that because I want to be in the markets. Obviously to catch big moves. So if I had a drawdown, I know that a winning streak is going to come, so I don't be having a break for too long. But for all traders, that's a good thing to do because it just kind of clears the head, and then you come back and you see the markets with a different perspective. Now, I think I have covered all the points that I need to. I've got this nagging feeling I've forgotten one. Anyway, if I have, I'll probably remember it and do it in another video. But I think, if you keep all these points in mind, it will help you basically see drawdowns in the right way, stay disciplined, overcome the drawdown, and get back to a new peak in equity. Right, that is the video for today. Thank you very much for watching me. Take care. Have a good day.